Hello, I'm Matt Schwartz with Schwartz Insurance Group here in Louisville, Kentucky, here with another in our video education series focused on employee benefits. Purpose of our series, teach you about the basics of reform and other benefit concepts, share the latest ideas and tactics that employers are using to be successful, and of course to position you to be a pro with regard to your benefits, communication, and culture. I want to talk today about exchanges. We've talked before about public exchanges, which are what's known as healthcare.gov, and then also some of the individual states created their own, like Connect in Kentucky. Those largely are designed to help the Medicaid population access benefits, those that are individual plans or small group, so initially under 50 employees, eventually it's going to be up to 100. But those essentially, that's the place where people can go to buy insurance. It's a portal that just allows you to shop. Theoretically, it's supposed to drive down prices. Not sure that we've seen that, but that is what it's supposed to do. And then, of course, that's where you get your tax credits and any kind of premium subsidies. So what I want to talk today about is private exchanges. So what we started to see in the market, really there's private exchanges that were originally designed to focus on small employers, meaning under 50, and eventually that would be under 100, and then those focused on large employers. So again, right now over 50, but eventually that'll be over 100. The small employer exchanges initially were designed to help, basically to help an employer set up a program where individuals could purchase individual insurance, meaning employees could purchase individual insurance, basically with their support. The employer had the ability to provide funding, and they, of course, made it a little bit easier for them to do it, but they were really buying individual products. When the guidance came out from the IRS that said, hey, you can't do that. You cannot fund individual insurance. You can't facilitate individual insurance. There's a $100 penalty per day when you do that. Of course, that kind of eliminated that option or that opportunity for small employers. Now, some of those private exchanges are still offering non-medical benefits. So they are providing a platform, making it easier to purchase. So those are out there, and I mean we have access to those types of to that type of program. The ones that I think are going to really take off are the large employer platforms. We first heard about this when Walgreens had an announcement. This is about probably mid-2013 or early 2013. There's an announcement that Walgreens was going to send all their people to an exchange, and the press picked it up and talked about, oh my gosh, they're sending everybody to the public exchange. That's terrible. There's a large employer that's dropping their group insurance. The reality was that was not what they were doing. They were actually setting up a private exchange, which really just allowed their employees to go on, have a better shopping experience, have some probably really tools and educational paths for them to learn about how to select products, and probably administratively just make things easier for Walgreens. And that's really what we're starting to see proliferate in the market, is private exchanges focused on large employers, which really simply make the process paperless. They start to integrate some of the functions that happen around open enrollment and decision making. There's a lot of the private exchanges that build in decision making tools. So a lot of it's avatar based, or there's access to information. So really what we're finding as we start to talk about these with employers is they're pretty advantageous. There's a small cost. I mean, you pay to have this service, but a lot of times, and specifically in the example that we use through United Benefit Advisors, there actually is, you get subsidies from carriers, so that actually you can really end up where this costs very little, if anything. So private exchanges are going to continue to grow. We think they're going to proliferate over time because of the fact that they make the decision process easier, they make the administrative burdens a little less for the employer. And quite frankly, they also allow for things like setting up a defined contribution approach to employee benefits. So we certainly welcome your inquiries if there's things that we can help you with. There is, as I said, a private exchange that we're using for large employers that is very robust and very interesting to look at. Let us know if you have interest in that or you'd like to see more about what private exchanges can do. If you have other suggestions for topics, please let us know. Again, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Look for the next in our series, Video Education, and you too can be a pro with regard to your benefits, communication, and culture. Thank you.